Congratulations on reaching a net worth of $250,000. In this video, I'll teach you how to get to $500,000. That's huge because you will be halfway to a million. But let me tell you, the strategies that got you to $250,000 are different from those that will get you to $500,000. So make sure to watch the entire video to find out all the strategies you can use to get halfway to a million in net worth. We will use repeatable strategies that quietly compounds in the background while you live your life. Because $250,000 isn't the finish line, it's the launch pad. Firstly, if you haven't already watched these videos on how to save your first $10,000, then the first 100,000, then 250,000, make sure to save these for later. Also, I just started this new channel, so please help me out by subscribing, liking, and commenting to help boost for the YouTube algorithm. Thank you. All right, so let's dive right in, starting with a net worth at $250,000. How wealth really doubles from $250,000 to $500,000. $250,000 really is a turning point, and here's why. At $250,000, money starts behaving differently. Below this level, progress feels slow because your savings matter more than your returns. Above this level, returns start pulling real weight. Here's why this stage matters so much. At an 8% average return, money doubles roughly every 9 years. But people who save aggressively and invest consistently often double much faster, closer to 5 to 7 years. And the biggest shift isn't financial, it's mental. You stop asking, how do I save more? And start asking, how do I deploy capital intelligently? Let me repeat that. You're focusing on how to deploy capital intelligently so that your money can start working for you. That mindset shift alone separates people who coast from people who compound wealth and become millionaires. So here are 5 steps to achieving this. Step 1. Secure the base before you accelerate. Before you focus on growth, you need stability. Think of it like building a house. You don't add a second floor until the foundation is solid. 1. Get rid of high-interest debt. Any debt over 7% interest is quietly but strongly working against you. Credit cards at 18 to 25%. Personal loans and high-interest auto loans. Paying these off is like earning a guaranteed return most investors would kill for. You don't eliminate debt because it's bad. You eliminate it because it steals momentum. At this point, you should not have and credit card debt or high-interest loans. If you do, cover those up immediately. 2. Liquidity buys you patience. At $250,000, your emergency fund shouldn't feel tight. 6 to 12 months of expenses gives you the ability to stay invested during downturns, flexibility if income changes, confidence to take smart risks elsewhere. For most people, that's $50,000 to $100,000 in a high-yield savings account. Not exciting, but powerful. In other words, having enough liquid cash gives you flexibility to make bolder moves to build your wealth, and you are not afraid of taking risks that could potentially be devastating. 3. Taxes are the silent wealth killer. This is where many high earners leak money without realizing it because they are not optimizing their tax-advantaged accounts like 401k, Roth IRA, and HSAs. The key strategy here is to max out your tax-advantaged accounts. Use HSAs strategically. If income fluctuates, look at Roth conversions during lower tax years. Taxes don't feel urgent until you look back and realize how much compounding you gave away. If you would like to learn more about how to save more on taxes, make sure to watch this video here. I bet you'll learn something new there that will save you thousands every year. Step 2. Increase your savings rate without hating your life. Here's a hard truth. Most people don't have an income problem. They have a cash leakage problem. At this level, you're not cutting lattes to survive. You're tightening inefficiencies to accelerate timelines. Small changes add up. Negotiating insurance, canceling unused subscriptions, and being intentional with discretionary spending. Freeing up even $500 to $1,000 a month and investing it consistently can shave years off your path to $500,000. And the key move here is automation. Money you never see doesn't require willpower. When saving happens after spending, it's fragile. When saving happens before spending, it's inevitable. This strategy is actually the same strategy that stays true from saving your first $100,000. Step 3. investing for growth, not excitement. This is where discipline matters most. You don't need brilliance here. You need structure. People who grow steadily usually follow a diversified allocation. Equities for long-term growth. Real estate for income and diversification. Bonds or cash for stability. Index funds quietly do most of the work. Real estate adds leverage and cash flow, directly or through REITs. Fixed income smooths volatility so you don't panic sell at the worst time. The goal isn't to beat everyone else, it's to stay invested long enough for compounding to do its job. Rebalance once a year. Ignore noise the rest of the time. Step 4. Add income streams that don't scale with hours. This is likely one of the biggest changes between saving to $100,000 and getting to $500,000. This is where $250,000 really starts to snowball. If you think about it, active income is powerful, but capped. Passive or semi-passive income keeps working even when you don't. Examples of passive income include dividend income, rental cash flow, digital products, and scalable side businesses. Even $2,000 a month, reinvested consistently, dramatically changes the math. Not instantly, but permanently. This is how people quietly outrun their peers without taking extreme risks. For those of you that are married, some great options have been to rent out a room or basement in the house, then splitting management responsibilities of the rental unit. Step 5. Avoid the traps that kill momentum. Most people don't fail because of bad investments. They fail because of bad behavior. Watch out for lifestyle creep after raises, trying to time the market, and overconcentration in hot assets like investing all your stock in AI stocks. The people who reach $500,000 fastest aren't aggressive, they're boringly consistent. How this all comes together. So here's the reality. You don't double $250,000 by doing one big thing right. You do it by doing many small things consistently. Protect your base, save aggressively, invest simply, add income streams, stay the course, and most importantly, track everything. Because guessing feels fine until you realize you're off track years later. When you can see your net worth in real time, spot trends early, and project future milestones, you stop reacting emotionally and start acting strategically. That's why I built a free finance tracker that shows net worth, auto-categorizes spending, and can help you optimize your life to reach your rich life. You can get instant access by going to my website in the description. You're already at $250,000. The second half doesn't require luck. It requires patience, clarity, and time. If you like this video, please make sure to hit the like and subscribe to help boost my new channel. So here's my question for you. What's the one move you're going to make this month to push yourself closer to $500,000? Drop it in the comments. And if you're still early in your financial journey, watch these videos on how to save your first $10,000, $100,000, and $250,000